Hi guys, so thank you for joining me once again. On our last video, or the last series of videos that we did, we talked about basically just the benefits of trading informally as a sole proprietor or a sole trader, which relinquishes you from a lot of the compliance and the complexities of having a registered business. So as a sole trader, you obviously, in terms of compliance, in terms of taxes, you just file them together with your personal income taxes, which then moves us into the next form, which is a registered business, right? Where you have a private company that you have registered, and what are the complexities or the implications in terms of compliance that comes into play when you have a registered business, right? And when we're going to get into a couple of things, right? There's three main areas of legislation or regulations that go into play when you have a registered business, mainly Department of Labor, which deals with labor laws and everything employment. And we are talking about CIPC, the Companies and Intellectual Properties Commission of South Africa, which deals with business, is responsible for keeping all the business registration and intellectual properties of citizens and other people, right? And we're gonna deal with I said Department of Labor, CIPC, and SARS, right, which is the big one, which is the South African Revenue Services. And then we're gonna just touch on these things for the purposes of this video for today. We're gonna touch strictly on the SARS side, and in the following videos we'll go into the labor and the CIPC side of things, right? So on the SARS side, please note that this video just serves for it's for educational purposes, but I would advise that the people that are watching these videos that found some benefit, contact and get in touch with the registered tax practitioner to help you apply the tax code and the tax laws to your unique situation. But this is for educational purposes so that you know what avenues are out there. So do consult somebody about this, right? So you have a registered business. You just got your registration certificate from CIPC, what we call as a CK certificate, or Core 14.3, I believe. And then you have the document. Now, when you have the document, something comes into play, right? Something comes into play is in the same time that you're getting your registration certificate, you'll get your income tax number for your business. All the registered businesses have an income tax number that is registered, right? Meaning that you fall into, and the income tax certificate leaves you under, you are registered and you have an obligation to file your returns for the company from the time going forward, right? So I wanted to explore the different types of businesses according to SARS, and what are the simpler tax types, or what are the things that you could register so that you minimize compliance complications and the requirements from your side, right? So in terms of the income tax, once you are registered for income tax, one of the processes that takes place, especially the minute you start trading as your business, is income tax that requires a bit of technicality. This is why not just everybody can do it themselves. Basically, you will need an accountant to compile an income profit and loss statement, or a statement of comprehensive income, and your balance sheet, and they would use these two reports to be able to file, meaning you have to do your whole incomes and expenses and then categorize them according to their expertise, and then you submit that report. That's income tax. But SARS, knowing that might be a bit complex for especially businesses that are starting up, they have made available other tax types that you can register for, that makes it easier for you to be compliant when it comes to SARS. So for the terms of this video, there will be three types of business that we're going to touch on, right? Focusing on the first two for educational purposes, which is a micro business. So under the registered business, there's a micro business, a small business, and a medium enterprise, right? For the sake of this exercise, we'll say a micro business is any business from the time you register it when there's zero income to about 1 million rand in turnover for the year, right? That's like yearly income that is coming into the business, right? So that it will be a micro business. And when you talk about a small business, we are talking anything from 1 million rand to 20 million rand that is coming into the business at any given financial year. And then medium to large is 20 million and above. And I'm sure those people have the financial resources to hire proper professionals to work within the corporations themselves, so they have the right team at the side. So my main focus will be mainly on the micro business, people that are just starting off to say, like, when you register a business, what are the things that are required in terms of SARS, and all the way to building yourself up to $1 million. When you skip that $1 million rand, you become a small business now officially according to SARS, right? And then one of the things that come into play and what you should consider, right? So like I said, or the minute you register a business, income tax is like you get a document, a correspondence from SARS saying you are registered for income tax. Now, income tax, notice when I've listed the kind of tax types that are applicable to different sizes of business, the income tax, the one that has income tax is the corporate income tax, which is the medium and large enterprise, which is the default one, right? And for income tax purposes, income tax is calculated as around about 20% of taxable income, which is mainly your net profit or so, and it's quite complex, applying the tax code, deductible expenses and all that, right? So it's a bit technical, but this is your default, which a lot of people find themselves in, right? The minute they register a business, they are registered for income tax, of which they will need to file that. It's a bit technical. So there is this thing where they call turnover tax, which is an option for micro businesses. If your business, you are turning over less than 1 million rand, you know that the revenue that is coming into your business is less than 1 million rand, you have turnover tax that isn't applicable. So the purpose of turnover tax that is to simplify this tax code. With turnover tax, you don't have to do your profit and loss statement, you don't have to do your balance sheet, you don't have to do your books. All that is required in turnover tax, you are taxed on your turnover, whatever money is coming on the business. Now, the nice part about it is that for the first 335,000 rand, there is zero taxes. So if you're making less than 335,000 rand and you are registered for turnover tax, qualify, and you are registered, then the tax that you pay is zero legally. You file your turnover tax, and then after filing, you get an exemption from that. Now, from any amount above 325, by the way, 335,000 in turnover yearly is about 28,000 rand a month, right, on average. So above that, so the maximum that you can pay, as long as your business, if you are registered for turnover tax, if your business is turning over less than 1 million rand, it's not more than 30,000 rand, right? And you can look at the tax tables for it, and I'm gonna leave a link for all these things. Like, for instance, turnover tax, I'm gonna leave a SARS links to the SARS website where you can read more about the turnover tax, and then the small business corporations and the other tax types that I'm gonna be speaking about, right? So there will be linked so that you can check out the tax tables, and do consult a registered tax representative to help you navigate these complexities, right? So turnover tax, it's something that is a very useful tool for micro businesses to minimize compliance, the need for accountants and all these things, and minimize cost for compliance, right? With turnover tax, they just charge you on turnover. So if you're making more than 335,000 rand, they'll charge you 1% between 335,000 rand to another tax bracket, and then 2% and so forth, right? So the maximum that you pay in this thing is about 3%, between 0 and then 3% of your turnover that you pay over, right? And the reason why I say the maximum you can pay when you are a micro business that qualifies for the turnover tax type, right, is that 3% of 1 million is about 30,000 rand, which it's gonna be less if you apply the tax table. So do ask your tax practitioner or your accountant about it so that they can assist you with that. Now, once you exceed the million rand mark and you come, or you are what you call a small business now. Now, a small business, a number of things come into play. Remember, a small business can also be filing tax under the income tax or the corporate income tax rate. But there is a specialized tax type that is applicable to small business to make it easier for them to file and be compliant, right? Which is what we call as small business corporations. This is for qualifying businesses, right? If you're a small business, you can get tax under a small business corporation. The nice part about it is that instead of paying a flat rate of 27 or about 28% of your taxable income as taxes, with the small business corporation, it gives you exemptions to say for the first about 91,000 rand of taxable income, there is zero taxes. And then if you exceed 90, from the amount that exceeds 91,000 rand, you would pay maybe a certain percentage of taxes, and then it's a slippery slope all the way to 28%. Whereas in an income tax, you pay 28% as a flat rate, right? So this is to make it easier for small businesses that are growing to pay less taxes while they're still finding their feet and organizing themselves, right? But the other thing that comes into play when you become a small business, the minute your revenue in any given taxable financial year or fiscal year exceeds 1 million rand, another law comes into play where you are required by law to register for VAT, right? And then VAT is a very, you are required by law, and law VAT introduces a number of compliance needs that you might need. You will need a tax practitioner, and chances are you will need an accountant to help you with keeping record and books and making sure that your reports are in order to file for VAT, right? And then another thing about VAT is that VAT is a very interesting thing. I see a lot of small businesses or micro businesses, right? Because they're trying to do some business and they ask them if they have VAT, and they rush to register for VAT. But what I see happening in terms of what's the tricky part about, once you register for VAT, every 2 months or so, you will need to file your VAT returns, meaning you have to charge all your clients. Any service that you're providing to somebody or any product that you are selling, you are supposed to account for VAT in every transaction that you do within the business, right? Which adds a lot of complexities for small businesses. So I've seen a lot of people register for VAT, and now once you've registered for VAT, even if your business is not trading, every 2 months you're supposed to file your returns, because VAT, I think the cycle for it is about 2 months. I'm sure there's special cases where there's different periods for different companies, but that you will have to consult with your registered tax practitioner to advise as such, right? So now you have registered for VAT and you're not trading, but every 2 months your returns are due. And when you don't file returns when they are due, SARS can impose administrative penalties for non-compliance, right? You become non-compliant, and then SARS imposes penalties if you don't comply. So you will need help with this. So I would say for a micro business to push back the registration for VAT until it's absolutely necessary, or you have a legit contract that is pending on VAT, perhaps that is a case that you might make to say, or like, I will need to register for VAT, and it might be worth it. So do sit down with your accountant to discuss whether and make the calculations on whether registering for VAT is worth it, right? So from the Small Business Corporation, which is subsidized business corporation, I'll leave the link for this on the SARS website again down below, as well as the VAT, right? So that you find out more about it and you can read more about it. And then obviously for the medium enterprises, which is making a turnover of 20 million and above, they have the corporate income tax, right? Which is the flat 28% rate, and has people that are dealing with that. And also obviously VAT is applicable to them. And then now the other tax type that I see, which commonly comes into play among small businesses, right, will be your payee. When does payee come into play? The minute you employ somebody, whether even if it's employing yourself, where your business is off the ground, you are in the space now where you can start paying yourself. Pay as you earn comes into play, right? Which is a tax type for managing employees. And remember that before you started a business, you were working for somebody else. It was their responsibility to register for payee, get your tax number, and withhold taxes on behalf of government from your earnings and pay it over to the government. But now that you're a business owner, it's your responsibility to register pay as you earn, withhold the taxes from your employees as you pay them, and then pay over that amount to SARS. And I think with pay as you earn, we'll discuss it in a bit more detail on another video or on our next episode or video, right? And yeah, so with payee, there's a number of laws that come into play. And the reason why I say we'll do it in a separate video is because payee triggers a number of things. Because when you register for payee, because you're employing somebody, labor laws come into play, because now you are an employer and there is regulations that manage employment, right? So in terms of basic act of Basic Laws of Employment Act, I don't know, it's skipping my mind right now, but I will obviously have it, I'll look it up and obviously have the information in our next video. But there's about 3 things that come into play, right? It's payee, And when you are registered for payee and you have employed somebody, another law comes into play, which is UIF, Unemployment Insurance Fund, that you have to register with the Department of Labor, as well as COIDA, that's Workmen's Compensation, that you'll need to register. I will make time in the next coming videos to discuss these things in a bit more detail. But thank you for joining me. If you have any questions, please drop your questions in the comment sections below. And yeah, if you have any topics that you would want to hear me speak about a bit more, you want me to touch on, please leave a comment, and yeah, let me know what else you would want to talk about. Thank you so much for joining me.